Hello and welcome to Talking Global Infrastructure. I'm Simon Montague, Corporate Affairs Director at the Global Infrastructure Investor Association, and I'm pleased to be joined for this episode by David Henderson, who's Chief Executive of Water UK. That's the membership body for water and wastewater companies in England, Wales, Scotland and Northern Ireland. David, you've worked as a political special advisor in Australia and here in the UK for both the Treasury and the Prime Minister's office. So I guess you're used to sitting in hot seats. Thanks very much for volunteering to jump into another one.
Pleasure.
Let's start a few weeks ago when Water UK apologised to consumers for the industry's long-term record and committed to a £10 billion investment plan. Can you talk us through that announcement and how it came about?
Yes, Simon, thank you very much. Very happy to. So I think we've seen that the public have become increasingly upset, and quite frankly, rightly so, about sewage spills over recent months, probably the recent 12 months, if we're honest. And we understand why people are upset. Nobody wants to see sewage spilling into waterways. It's the last thing anybody wants. And we agree that companies should have given more attention to this sooner. And that's why we apologised. We were not sufficiently in touch with the public and not in touch with their growing frustration about this issue. And we're very sorry about that. And so as part of demonstrating that we are genuinely sorry and that we want to see things change, we've outlined an ambitious proposal to treble the rate of investment to tackle the issues of sewage overflows. They are a feature of our Victorian system, and we have a £10 billion plan to address that as fast as we can. It will, we hope, if approved by Ofwat, see sewage spills reduced by 40% by the end of the decade from the beginning of the decade, and that will make a major difference. It won't fix the problem, but it will do a lot to address people's concerns about sewage flowing into the waterways around England.
You mentioned there trebling the rate of investment, and clearly your ambition is to rebuild confidence in the industry. But I guess to do that, you've also got to rebuild public confidence in private investment and indeed the confidence of private investors to continue to invest in the industry. That's all a pretty big ask, I'd guess. I mean, how are you planning to do all that?
Well, absolutely. We recognise that there has been a loss of confidence in the model of private investment that we see in England. And that's for many reasons, and we could talk at length about what's led to that loss of confidence. We know that this to turn around is going to take a lot of effort. The industry and investors need to highlight the benefits that have been provided in the past from private investment, and to demonstrate the benefits and value that additional private investment will bring. And I strongly believe that the fundamental features of the water sector remain well suited to unlocking the levels of investment required to ensure the future resilience of the infrastructure and to ensure environmental outcomes improve. We know that water companies currently have ready access to global financial markets, and the UK's system of independent economic regulation has historically given confidence to investors to make very considerable investments. And we need more confidence in order for them to be able to feel confident to make even greater investments into the infrastructure of our country in the years to come. As part of doing that, we cannot take the public and stakeholder support for this model for granted. So we need to continually show that the privatised system that we have does deliver for them.
The Industry and Regulators Committee of the UK Parliament's Upper House of Lords, for those that don't know, the UK Parliament, has said in a recent report on water that Ofwat, now of course that's the water regulator, Ofwat has failed to ensure companies invest sufficiently in water infrastructure, choosing to keep bills low at the expense of investment. And of course, in fact, the UK has some of the lowest average water bills in Western Europe. Prices have barely risen for 15 years. So how can investors and water companies be expected to raise capital for badly needed long-term investment in an environment where the water regulator is prioritising keeping bills down?
Well, I think that there is acceptance across the board. I mean, I talk regularly with the CEO and the chair of Ofwat, and I talk with the Environment Agency and with DEFRA, as well as other departments of the UK government. And there's a recognition across the board that there is an urgent need for investment to transform the quality of our rivers and our beaches. We need to radically reduce the leakage of our pipes and protect the future water resources. It's very clear now to us all, I think, and to including the regulator, that bills will need to rise in order to enable that investment to come in a sustainable way and to meet the challenges. Clearly, in the past, there has been pressure to keep bills, as you say, very, very low. And had they merely risen with inflation since 2010, water bills in England would be 20% higher. So historically, I think that pressure on keeping bills low did provide a level of support for people, but there's now a need for bills to enable investment to flow in to give people what they want, which is the improvement in the environment. Ultimately, it's for Ofwat to determine the appropriate level of return for investors in order to drive the improvements that we want to see. And in the past, in the last 12 months, those returns have been around 3.8%. So fairly modest, I would argue. And there's a discussion to be had with Ofwat as to whether that rate needs to change in order to enable the sheer scale of increased investment that we know is needed to deliver people the benefits that they are after, and at the same time protect vulnerable customers. And we are living in a moment where a lot of people are doing it very tough in the UK, and we need to be very conscious of that. This year alone, companies in England have provided an additional £200 million to support vulnerable customers with the paying of their water bills. More than 1.2 million households across England now receive support to pay their bills. And I would think as bills rise to fund the investment increases that we need, we're going to need to see additional funds being allocated to vulnerable customers so that they are supported through those increases.
And on that, I mean, how does one ensure that the least well-off are indeed supported by social tariffs? Is that a job for Ofwat, as I think you mentioned then, or is it a job for government or for water companies and water investors to actually ensure that these social tariffs do come about? Who leads on that?
Well, every company in England has a social tariff. There are debates about whether there should be a single unified social tariff across the whole of England. The government has made it quite clear that it does not support that position. So I think in the absence of having a unified single model across England, there needs to be examination as to what more can be done. Currently, DEFRA, the Environment Department in the UK, limits the ability for companies to subsidise from wealthier customers to poorer ones within their area. They need to obtain the consent of their customers for that to occur. And some customers have found that easier than others. So I think there is a need to look more comprehensively at the mechanisms for providing support to vulnerable customers. As we know, bills are going to have to rise to fund the investment, and they're probably going to have to rise by a not insignificant amount. And so we will need to explore ways to unlock the current mechanisms that may restrict the ability for companies to ensure vulnerable customers receive the support that they need.
We've got, clearly there's yourselves, the water companies, there's Ofwat, the water regulator, there's the government itself. How do you think we get to this conversation that you've talked about of getting and enabling prices to rise, not insignificantly, I think you said, because it seems to be a conversation that just hasn't started yet?
Well, Ofwat requires all companies in the lead up to the submitting of proposals for PR24, the Price Review 24, which will set the 5-year investment horizon for the rest of this decade, to consult with their customers on the forecasts that they have based on the proposals as they're currently being constructed, and to gauge customer appetite and willingness to support that investment through rises to their bills. And so far that has begun to be noticed by the press. There have been quite a few articles now across the media and discussions among members of parliament as to what those rates may mean for people and whether those rates should be supported. I don't think anybody is seriously suggesting that the level of investment that's being proposed is insufficient or too much. It's a question of ensuring that the vulnerable people that we know in society are finding any increase in their cost of living very, very hard to manage, that they are looked after. So I think the discussion has started. We at Water UK are wanting to bring more focus to this. And in the discussions we have with water companies, we are discussing how we may go about ensuring that vulnerable customers are protected.
If one follows some of the media, with the UK's publicly owned water authorities being privatised back in 1989, some of us are old enough to remember that, that was after the government had found itself unable to invest sufficiently in the industry. So I just wondered, what's your response to those who suggest, and perhaps they're more frustrated consumers than they are political parties? None of the political parties seem to be suggesting renationalisation, but certainly there are consumers who think that's the answer. What's your answer to that?
Well, I think anybody who looks at the state of the public finances will see that there is limited opportunity for government to fund very large investment in infrastructure And water is not the only segment of the economy that is in need of investment. I mean, one only needs to look at the state of the nation's health service, schools, defense equipment, transport, energy, so on and so forth. There are lots of people in the queue for taxpayer funds to enable greater investment. So in England, since privatisation, £190 billion worth of investment has been brought into the infrastructure of the water and sewage companies by private investors. And that is much, much more than had been provided when the system was owned by the taxpayer in the 80s and in previous decades. In fact, it's 84% higher, as I understand it, than before the system had been privatised. And that investment has brought about very significant improvements. Over 70% of beaches are now classed as excellent, which is up from 30% in 1995. Leakage has been reduced by over a third since the 1990s. Drinking water quality has improved from 19% in 1994 to nearly 100%. Productivity within the sector has grown by 64%, far better than it has for the economy as a whole. And at the same time, water bills have been kept low. And as I mentioned earlier, since 2010, they've fallen in real terms year on year on year and would be almost a fifth higher had they risen with inflation. So nationalising private water companies without compensation would have a profound effect on the pensions of almost 6 million people across the country who are invested in the sector. And to ensure that they are compensated would necessarily involve the reallocation of funds that are currently used for other public services. So at the end of the day, somebody has to pay. It's either the taxpayer or it's investors, and that investment is recouped through customer bills over the very, very long term. And as I said, we have seen the benefits that model has brought in England. And so as we now need to see even more investment, as I say, on stormwater overflows alone, a trebling of investment, £10 billion over 5 years, the idea that the taxpayer is going to be able to find that cash easily, I think is misguided.
But if we assume that the industry is going to continue in a privatised form, that therefore means, of course, Ofwat continues to exist as well. And one of the things that the Department for Business and Trade is currently doing is reviewing economic regulation in the UK of the water, energy and telecom sectors, including regulators' duties, things like how regulators can enhance innovation, how they encourage greater investment. So what sort of policy and regulatory reform do you think is required to unlock the levels of investment that's needed in water?
Well, we at Water UK, broadly speaking, think that the 5-year price review mechanism for bringing in investment is about right. Efforts in energy, for example, to lengthen that period to about 8 years actually were reversed by the energy regulator. So I think, with the exception of some very large projects such as reservoirs or the Thames Tideway, which is a sort of super sewer as it's commonly known, going through London, these sort of very, very large infrastructure projects that require much more than 5 years certainty, I think they're slightly separate cases. Broadly speaking, we think the regulatory model that attracts investment over a 5-year horizon is the right one. And we're willing to entertain any ideas on how that model could be reformed and improved. I would say, though, that I think however one looks at the regulation, investors need confidence. And major alterations to the regulatory framework without due consideration and due consultation are very likely to hinder the attractiveness of the United Kingdom's water system to foreign investors and domestic investors who clearly have many other opportunities to park their money. And so if we want to ensure that it comes into the water industry, I would say that we need a degree of certainty from the regulator. And the current round of announcements in recent time is starting, I think, to make it more difficult for investors to have the sufficient amount of certainty that they require to make very large investments. So we keep an open mind as to any regulatory proposal. But at the moment, I think the current rate of changes, as I say, is probably where we're at in terms of near the limit of pace of change.
That's an interesting observation, because I think certainly talking more widely to investors who are members of the Global Infrastructure Investor Association, there certainly is a broader concern about the attractiveness of the UK as an investment destination compared with, say, the US or Europe, both of whom have huge subsidy packages. So I guess we'll have to wait and see what comes out of this review of economic regulation. But certainly I think stability and sort of consistency of policy would be a very welcome thing.
Yes, I would say, though, that if we think about what's driving this, it's because the sector hasn't kept pace with public expectation around environmental outcomes. This is one of the reasons why we were keen on behalf of the industry to apologise. We had failed to pay sufficient attention to rising levels of frustration and anger concerning the environmental performance of the water companies. And so I think if we hadn't gotten ourselves in this position, we wouldn't be seeing so much criticism of the regulatory model and suggestions for radical change.
You mentioned a little earlier the question of the really big investment projects. And of course, on the planning side of things, the last big new reservoir to be built in Britain was Carsington in Derbyshire, which was more than 30 years ago. To what extent is our planning system another issue that needs to be tackled to get long-term investment in a greater degree than it is at the moment?
Well, there's no question that it has produced results that have hindered much needed infrastructure. I mean, Water UK, we've been pushing very hard for nearly 10 years for significant increases in investment in water resources. Previous plans and proposals for reservoirs have been consistently blocked, not by the water industry, but by regulators or by the government itself. The good news, though, is that companies, regulators, and also the government now get it. I think they very much understand that there is a plan they need to support, and that unless we have that plan, we are going to have insufficient levels of water available for people, particularly as temperatures continue to rise thanks to climate change. I mean, the Environment Agency has actually now gone on the record to concede that it should not have blocked reservoirs in the past and that it won't do so again unless there's an extremely good reason. We have proposed, that is, companies across England have proposed £14 billion worth of investment in 14 new projects for water resource increases. And we've also put forward very ambitious plans to reduce the level of leakage because, of course, it's one thing to increase the supply of water, but if it's then lost through leaking pipes, it very much undermines the benefits that would otherwise provide. So this is really a comprehensive set of proposals that we're putting forward in October to the regulator. In fact, we think it's the biggest program of investment since the Victorian era. We're very hopeful that it will receive favourable assessment by the regulator. It's obviously up to them to apply scrutiny and rigorous challenge and look for the right levels of productivity and efficiency. But there's no, I think, disagreement about the fact that we do need now very, very large infrastructure to be built. And part of that means overcoming past reservations around infrastructure such as reservoirs.
Overcoming those past reservations, I guess, is a more important challenge than ever because, as you mentioned just a minute ago, we've got climate change coming on. We've got droughts becoming an ever more serious risk in the UK. So on top of all the maintenance and renewal work that's been there for the last, decade or two, there's now all this extra stuff on top as well for the next decade or two. How can I put this? Where do you think the public are going to end up in terms of the value and the understanding they have of the need for investment in water compared with their understanding and the value that they attach to water now? And it's just been one of those cheap and cheerful things we've had forever, but it doesn't feel like, from what you're saying, that's how it's going to be in future.
Well, I think, relatively speaking, water will continue to be modestly priced. Even some of the largest estimates for the increases that could occur thanks to the investment program that has been proposed or set forth are still going to mean that water is relatively modestly priced. But that is not to in any way suggest that we are not absolutely alive to the concerns that people face given the cost of living pressures that they're experiencing. I mean, the rise in interest rates are very pronounced. Many hundreds of thousands of people are having extremely sharp increases to their monthly mortgage costs. We've seen food inflation at around 20%. And of course, that's just the average level of inflation. In some parts of the country, food inflation is considerably higher than that. And for people who are on modest incomes, the portion of their weekly expenditure that goes on essential services such as water, electricity, and food is much higher than it is for people who are earning considerably more. So the actual real feeling of inflation for people on modest incomes is very, very high. And that means that even though we might be able to show that the increases in water after a 15-year real terms fall are relatively modest, we do always need to keep in mind that many people are doing it very tough. And that is why, as I mentioned earlier, we do need to have more sophisticated and more generous support for vulnerable customers, which we're hoping will take place through the next price review period.
If you had to jump forward, well, let's jump forward about 18 months from now. So we're into 2025. We've got a new government of whatever colour. We'll have had a lot more public and industry conversations around levels of investment, around what the price of water should be. Where would you hope, what would you hope the industry would feel like in, say, 18 months from now, compared with where we are today, which is still a pretty controversial and somewhat frustrated and angry environment?
Well, one of the big reasons for why we went out last month and apologised and set forward a very ambitious plan was in recognition that we had not been keeping pace with public expectation. We were not sufficiently in touch with rising concern and frustration. I would very much hope that in 18 months' time, that the public starts to see and believe that the sector has got it and that it has changed, that it is now much more sensitive to and alive to its concerns and wants to work in a way that ensures that their hopes and aspirations concerning environmental performance and corporate performance are where they should be. So in 18 months, I would hope that means that there's less concern around executive remuneration, for example. There's less concern around the nature of the relationship between investors and the dividends they receive and the performance of the companies. I would hope that the environmental performance of companies has improved. Unless we have those types of improvements, we're going to continue to see people feeling very frustrated and let down by their water companies, and that's not where we want to be.
David, you've given us a bit of your time, and clearly there's an awful lot for you to do from what you've said in the course of our conversation. So thank you very much. It's been a pleasure talking to you in your role as Chief Executive of Water UK, and hearing in particular your thoughts on the future of long-term investment in this industry, how it's brought back in again in even greater amounts, and what that means for the industry and for its consumers. So thank you very much indeed.
Pleasure. Thank you very much too. Always happy to speak to investors.
And that brings us to the end of this episode, so thank you for listening. Do look out for news of our next monthly podcast on LinkedIn, Twitter, and on our website, GIIA.net. And please do follow us on Spotify and iTunes. Goodbye.